We're watching the shares of Lululemon this morning. It's a big gainer. The company raised its full-year outlook on strong overseas sales. Our next guest continues to see Lulu as a strong brand and believes long-term concerns, however, remain. We're joined now by Simeon Siegel, Managing Director of Equity Research at BMO Capital Markets in New York. Simeon, the stock is down a lot this year, more than 35%, but getting a reprieve today. This is a stock that over the years has moved very dramatically on occasion on the back of earnings results. What's your take on the earnings that the market is reacting to, and what's your take on the market reaction?
Yeah, hi, good to see you, and happy holiday season. Listen, I think the way you just framed it is perfect because it's all a matter of relative. You started by saying no one's going to look at Lululemon today and say start with the sentence, the stock is down, but you did because that makes a lot of sense. Because we're seeing this today, it's moving a lot, it's recapturing a lot, it's squeezing a lot of shorts, and it's making people question again, maybe it's not on its way down, maybe it's not on this negative inflection. I think what we need to look at, though, is we need to look at the core. You started by saying the international business carried it forward, and it did. The US business was flat. If you and I were to look at Lululemon in the group, just alone, its US business is underperforming the broader apparel group, and its gross margins underperforming the broader apparel group. I think those are two very important questions. And so that's why I say it's a very strong brand. It's a big brand. But you and I also have to think about it from a stock, and we have to think about it relative to its competition.
A lot of talk there seems to be a lot of talk among analysts today about the leggings business at Lululemon. That's one of its foundational product lines, obviously, and it's a mature product line, but they're still able to drive growth there.
Isn't it fun when people on Wall Street are spending their time talking about leggings? It's great, right? It's fun. It's a fun world I cover. No, you're absolutely right, but it's a similar idea because at the end of the day, there's the core geography, which we just touched on, and then there's the core product, which we have to touch on. What Lulu has done very well with over the last several years is finding some adjacencies, whether it's a belt bag that you wear across your body or whether it's now a Mickey Mouse collaboration. Like, there is room to find that extra product, but what you need, to your point, at this size, is to know that you have continued growth at your core. And I think that's going to be this question. And that's why I think what's really important today, notwithstanding the stock, we had actually gotten very excited about the checks we had been seeing. My team, thank you to them, does some really nice work looking at the products. And for the last month, you could see the product resonating. You could see that discount looking better. So I'm not surprised at what's happening today. Maybe the order of magnitude is a little bit harsher or better, whichever way you want to look at it. But I think for the long term, you have to question, you have to ask, can Lulu grow in the US and can Lulu grow its leggings? Or is it a very large business and now we've hit that level of maturity?
So what is your rating and target on the price, and what's your view on valuation?
Yeah, so we're neutral, where my price target is lower than it is today, above where it was yesterday. So right around that 300-ish, because the way I look at it is I do think it's a compelling brand. I think there's nothing broken about Lululemon, but I worry that brands have a peak. We have found with our research that brands in North America, and this is more predominantly US because most Canadian businesses don't have the presence that Lulu has. So they have, let's say, more permission to stretch above. But so let's say within the US, you have $3 to $4 billion worth of brand dollars. Lulu's well above that. And so I'm going to give them extra credit for their Canadian business, which is incredibly strong in a way that others don't have. But either way, you still move past that peak. And what we find is brands do stretch past the peak, but then they typically come back down, and they come back down in somewhat of a painful way, because what they did was they went for those adjacencies. They went to try and stretch the audience. And so I think what we are looking at is we're looking at a business that has compelling brand equity. I love the brand. But from a stock perspective and from a growth perspective, I think we've seen the best days in the past. And so that's why it's a neutral. It's not a sell. It's not saying there's some serious problem here. But my job is to look at the stocks. My job is to think about how much growth can come. And I think Lulu right now should preserve their quality of sale, should focus on international. But I don't know that that means you get a phenomenal multiple. And so the way we're looking at it is 20 times earnings, but looking at it another way, today, I haven't looked at it where it is in the last 5 minutes, but I think it's about a $50 billion market cap company for a business that's supposed to do $10 billion in revenue right now. That sounds like VC level multiple. 5 times sales is VC level multiple. And so the question becomes, can that growth justify it? If not, that's a dramatically more, it's a much higher premium than anything else I look at.